Well, good morning. It's May 24th at 7:40. We'll call the meeting to order. We have 4 of our 5 board members available. One's on travel, so we have our quorum, and we'll get going. The first thing we have is we call the meeting to order, so we've got that. The next thing is the review and consider approval of bill schedules and warrants. Everyone can review those as we go through, and we're not going to do minutes today. We're going to do minutes next month when they're ready from everybody being locked up and avoiding COVID and everything else, so we'll get that done for next week. So that leads us to the next item on the agenda, which is review the 2021 electric audited financial statements. And with that, I'll turn it over to you, Chris, and you can introduce whomever.
Yes, please.
Good morning.
Hi.
Jim Goulet with Goulet Salvador Associates. I have Adam Schemzer, the lead accountant on this project. So
Nice seeing you again, sir.
nice to see you guys too. Very good. Pleasure to be here, and it's a pleasure to present your audit report for 2021 with comparative numbers for 2020. I'll just do a quick summary or overview of what's in this report, and so there's a lot to it. These pages keep growing every year with new pronouncements every year. We're up to 45, so I'm not going to read 45 pages. We'll be here till midnight. The important part is our independent auditor's report right at the beginning of the project, and I'm happy to report it's a clean opinion. There are no issues that you get no qualifications on the report. Believe it or not, there are sometimes we do have to qualify reports in recent years due to pension actuarial studies that are being done. Not in like West Region Retirement System, for example, doesn't have their actuarial study done in a timely fashion. So we actually have to issue a qualified opinion. So fortunately, you have your own retirement system, and there are no issues. Thank goodness. So that's the good news. That's what you hired us to do, to issue that report that says you're in good shape. The next section, beginning on page 4, is the management discussion analysis. So that's your take, in layman's terms, of what's going on with the department. I think it's the best source if anybody wants to say, financially what's going on with the department. I refer them to the MD&A. We call it. It's summary form, but it gives really good helpful information on how things are going here. We don't audit that, so I won't go into it. We do make sure that the numbers do coincide with the audit report, though. Okay, a lot of really good information, some nice charts about rates and kilowatt hours and all that good stuff. But our report really begins on auditing, beginning on page 9, a statement of net position. Net position sometimes may be called a snapshot in time as to how you looked financially, historically called a balance sheet. So the current assets, and again, current would be assets that are used in the normal operating cycle of a 12-month period. So cash, operating fund, $14.9 million. And I would say I want to make an overview of this department. We do many light departments. And this year, I think that there was consistency. You can almost take 2020 numbers and put them into the 21 column. They're so identical. And you're no exception. Your numbers are really very, very consistent. No surprises this year. No unusual things going on in the industry. And so numbers are pretty consistent. Accounts receivable, I noticed, just as an overview, accounts receivable are down, and I think what I'm seeing is after the COVID, when you couldn't do any collections, I think things are getting back into better order in terms of trying to get some payment plans with some folks that have had the tough times with the COVID in the last few years of economics. So I know your receivables went down from $2.3 million to $1.8 million. And there is about a $250,000 reserve for uncollectible accounts that you may not get. Other receivables would be jobbing income, and others are scheduled. We'll get to that. I'm just going to highlight major items. So as you can see, total current assets just over $20 million, just under $20 million last year. Non-current assets, Depreciation Fund has been increased nicely. Construction Fund and the Power Cost Adjustment Fund have remained stable. Pool financing reserve, you probably know all this, but that's money that when you have pool financing obligations that you have to put some money up to be held in deposit for that project until it comes off at the other end. So it's a long-term asset, not current. Our rate stabilization fund stayed consistent at just about $3.8 million. Preliminary survey investment is a project that's, I believe, under consideration. And when that becomes a project that's operating, those funds will go to become a plant account. Let's see, net pension asset. So you're actually overfunded slightly in your pension obligations, which is unusual, but that's a great position to be in. Plant assets, which really is a major asset of this department. You know, your buildings, transformers, poles, everything you own, which is the department, provides us this great electric service, has a net value of just about $39 million. So that's from day one when the department started until currently. So total assets, $78 million, up from $70 million. And then you have the deferred inflows. You'll see on both sides of the balance sheet there's deferred inflows and deferred outflows. And to sum it up, those are really just timing differences of when certain financial transactions occur. And the GASB has decided they're going to amortize any fluctuations over a 5-year period. So this is going to be rolling numbers in and out every year. But generally, they're just timing differences. So total assets, $84 million, up from $70.9 million. On the liability side, not a lot in liabilities, as typical of municipal light departments. Accounts payable, $1.5 million. Generally, that's your December power bills that are paid in January. Accrued expenses could be accrued vacation pay, sick pay, any accruals, accrued insurance, things like that. The bond payable, the current portion is $300, and the pool financing loan. So those are the payments due again in the current period, that 12-month period. So those are the amounts that are due in the next 12 months. And down below in the non-current, you get the amounts due after the 12 months. So the bond payable at $3.6 million. You see it went from 3.9 down to 3.6. The next year it'll go down another $300,000 for the principal that'll be paid next year. Pool financing loan, almost $6.5 million, down from 7.3. And the open liabilities remain fairly constant. It's only $768, which is nearly 100% funded. So that's a good thing. Total liability is $14.9, down slightly from last year. Then you get your deferred inflows of resources again. On the other side, again, timing. There are two accounts in here that really aren't related to OPEB or pensions. You've got your contribution aid of construction, which are funds you're holding from customers or contractors who are doing projects in town, and that'll be applied to the plant once those projects are also complete. Rate stabilization fund stayed pretty constant, $4.3 million. Deferred inflows related to OPEB and pensions are the numbers. The pension one did fluctuate quite a bit this year, and I believe that there were some changes made in the actuarial study that sparked that net change. So we take assets minus liabilities, we get our equity, our net worth. In this case, we call it as we call it, a net position. So a net position is broken down into different components, whether it's restricted or unrestricted. So our capital assets, which is our plant minus our debt, is the major net position, $27.5 million. The net position, see, depreciation fund by Chapter 164 is a regulated, it's structured. So that's a restricted account, so you can't just do any amount with depreciation. So that says there's no restriction, so it's $4.8 million there. And the rest will be unrestricted net position. Several years ago, when the pension obligation came on the books of municipalities, many light departments and towns had actually negative net position unrestricted because of that. Huge liability got brought on the books, even though it's not due for a very long time. But you're in a very good position with $21.4 million of positive unrestricted net position. Okay. That's that snapshot in time. How you look great. Statement of revenues, expenses, and changes in net position. The income statement, if you will. For the operating fund, you can almost take, as I say, the 2020 numbers and put them in the next column. They're so identical. Very comparable numbers, $32 million of operating revenues, $27 million operating expenses, operating income, it's like $100,000 different than last year, so $5.2 million, very good numbers. Then you get a few other items of interest, income, and expense, bring in your total income before contributions and transfers down to $4.8 million. just down slightly from $5 million last year. Then the last item on that side would be your payment in lieu of taxes, which is, it's like a below the line, like a dividend, 266,075, very comparable to the prior year. Okay. The next statement is a statement of cash flows. Doesn't mean an awful lot to lay departments. It's more of a banking report. But it does break down what's going on in the department from a cash flow standpoint. And the most important one would be the cash flow from operating activities, which shows a positive cash flow of $7.4 million this year. That's important because that measures your ability to, are you able to pay your bills? If you're in financial trouble, that number would be a negative and you'd be in trouble. So all light departments have good positive cash flow from operations. Now, what you do with that money is a different story. You spent $5.8 million, or you utilized $5.8 million in cash, and most of that relates to additions to plant or paying down debt, shoring up your depreciation fund, $2.4548 million. So those are what things you do with the cash flow that was generated from the operations. Overall, your beginning cash was $16.7 million, and you ended up $18.3 million. So, very good picture. On the bottom of page 13, I'll just note that the accounts that are used to measure this cash flow activity are the bottom three numbers: the operating fund, the construction fund, and the power cost adjustment fund. So those are unrestricted cash accounts. You can do it if you want to do whatever you decide to vote. So $18.3 million. The next statement is actually sort of a standalone statement. You elected several years ago to become to establish an OPEB trust fund, and this is the report of that trust fund. Very simple, but it shows your funds at deposit with the town treasurer, your investments, $2.3 million, and that's at the end of the year, $2,046,000 to begin. So down below, the changes where you made an annual contribution both years of $113,600, and your net investment income was $213,883. Now, I wouldn't want to predict what investment income might be for 2022 right now, but we'll see what happens. Yeah. But it's been a great way to increase the net position of your OPEB trust fund, and we'll see down in the footnotes, how much we funded as far as how much money you set aside and how much you're obligated. Okay. The next section is the footnotes, which of course go on for pages and pages. There are no new major footnote changes or GASB changes this year. No new pronouncements that came into effect for your financials, which is good. Note 1 is the summary of significant accounting policies. Again, there are no changes there. A lot of highlights, a lot of information, important information, but I'm going to flip through that one because there's nothing new. Depreciation fund, again, is not new. It talks about the fact that you have a fund set aside and what they should be used for. Note 3 mentions funds at MWEC. So MWEC is your power agent, and various projects require working capital. So when we pay our light bill, it's actually MWEC paying it from funds we have on deposit there, so that we have the ability to pay our bills timely. Sometimes paying bills in a town gets a little sticky, takes time. So the money's at MWEC. They process the bills there, and we replenish that fund every month as a result of the bills we receive. The rate stabilization fund is a project or a fund set up at MWEC where we have $3.7 million invested for the rainy day fund. Prepaid PASME fund. Again, these are nothing new. These are projects you've been involved in for many, many years. Again, that's a small fund where you only have $167,000. And again, from that money, they'll pay the PASME, New York Power Authority bill every month. Concentration of credit risk talks about risk and investments. Note 5 is a detail. I'm on page 20. Note 5 is a detail of the other accounts receivable. So you got the regular accounts receivable and then the other. The due from MWEC is probably Berkshire Wind Rex. I'm going to suggest.
It's actually the SREX.
SREX, okay.
The solar.
The solar, okay, good. Energy conservation loans. You have a unique program going on here where you loan money at 0% interest. So we'll be tracking that activity. Investment associate companies. It's Hydro. It's been an investment on the books for a long, long time. It's Hydro Quebec. Note 9 is a nice report of your plant by division, production, transmission, distribution. The top half is gross cost, so you've actually invested over the years, at the end of the year, up to $85 million in cost of plant. It's been depreciated down the bottom to $38 million after depreciation. Okay. I mentioned earlier construction progress accounts and asset account up at the top. You see that it started at 190 and then 257 was increased. So if there were decreases, I mean a project that we're working on became completed, and that would be moved from the top down to the various sections of type of plant that it is. Net investment and capital assets. We mentioned the net position, and the major one was your capital. Well, this is a calculation of that. So you start with your gross plant minus depreciation, and then any debt that you have against that comes off to get you in that position. Pooled financing loan. These are other projects that you have through the MWORK pooled financing program, and it shows the debt service. You have to show it in five-year increments, and then everything after the 5 years. That little schedule down the bottom. There are appear to be two outstanding loans. Okay. Continue on page 23 under long-term debt. There's also the general obligation bond. That's that one we mentioned, a $300,000 a year amortization of the principal. And there's a schedule that shows the principal interest payments out through 2034. The pension plan has, there are no changes in the provisions that I'm aware of, so it goes on for several pages, all the required disclosures about how it operates and who's eligible, all that stuff. I always look at, on the bottom page 27, not to skip all that, but it's interesting to see if one of the assumptions, or one of the major assumptions in the actual study is the discount rate. And on the bottom page, it shows you a 1% increase or decrease and how that would affect the obligation. So right now, you're 5.4 million. 1% increase would go almost double it. So it's a major factor. I at least find that interesting. The rest of the stuff's not so interesting. Related party transactions. Note 14 talks about your interaction with the town. We sell them electricity, we reimburse them for expenses, insurance, and things, and just required disclosures for related party activity. Payment in lieu of taxes, the 266 for the year. It's disclosed there in detail. Then note 16 brings us to the OPEB, the other post-employment benefits. Again, explaining all about how it works and who's eligible. Since there are monies invested in the OPEB fund, we have to explain if there's any risk associated with those investments. That's when you see in financial statement, the level 1, 2, 3. Those are measuring the risk level of certain investments. I don't believe I've ever seen a late department that had anything other than level 1 investments, so they're all safe, secure, and none of that. But we're governed by Massachusetts in terms of what type of investments you can even invest in. So there's a list of investments we can invest in. So you're all well within the boundaries on that. On the bottom page 30, there's that. I mentioned, well, what do we actually owe? So there's the OPEB liability of $2.9 million. The fiduciary net position is $2,196,000, so our liability is $768,000. So yeah, pretty well. Fairly small, insignificant deficiency there. There are two schedules that show that 1% increase or decrease. So on the bottom page 31, that shows a 1% increase based upon the discount rate changing by 1%. Again, since the amount is fairly small, the net change is not as drastic as like the pension. However, on the next page, there's also a change in the health insurance rates. If healthcare costs trend up or down 1%, you'll see the change. It's really not that significant because you're so close to being fully funded. Note 17 goes on to explain more information about the OPEB account. The deferred inflows and outflows, as I mentioned, are again timing differences. Or for example, let's take a look at, let's say, top page 33. It's a change of assumptions. So if an actuarial report is done previously and now it's done again, if they change any assumptions, they measure the net change resulting from that. And rather than hit the profit loss statement all that year, they're amortizing that over 5 years. Not quite sure why. They bought the whole pension all at once, they bought the OPEB all at once. Now we're going to use a 5-year amortization. I'm not sure, but I don't make the rules. difference between expected and actual experience. So these are things that happen both in the pension and the OPEB that will be amortized, and it shows the schedule down below there of the 5-year amortization. That's a rolling number. It's going to keep changing every year. Risk management, we mentioned you're involved in the self-insurance trust, Mass Mutual Self-Insurance Trust, which is with certainly a very good place to get more protection for any potential liabilities. 19, commitments and contingencies. This goes on, and there's also good reading about this in your MD&A. It talks about your projects you're involved in, your obligations under those power sales agreements. Bottom page 35 lists all the projects, most of the projects you're involved in through MWRC. And then the 2015A is one that has debt. Actually, it's a fairly new project. Your share is 15.9 million of debt over from 2022 going out to 2051. Berkshire Wind is a footnote, talks about that's a success story, and the expenses related to that are on the bottom, page 37. Your share of year 12 looks like you're 12.718% of the project, and it gives you a breakdown of your debt service going out to 2030. There was a change in the 2020 financials that affected 2021, and there's a modification related to an accounting policy change where you previously weren't accruing certain expenses, and now we are. Accrued payroll?
It's accrued payroll, yes.
Payroll, okay. So it didn't have a huge effect, but we just have to disclose it was a restatement of last year's. Okay? Now, I'm not sure what we're going to do these next few reports because, as you can see, they're getting hard to read already, and this report has to go out 10 years so when it's finally implemented. So we'll have to use legal size pattern, fold it in, I guess. But this is just more reiteration of the pension and OPEB documentation for all the activity going on and obligations and all that good stuff. I had noticed in the 21 column that the SELCO's electric portion of the net pension liability NPL was 45%, which was a big difference from the previous years across. But I guess the actuary did things a little bit differently this year and did some reallocations of that. So I guess, again, we don't audit the actuarial study. We just take his numbers and we ask questions. Sometimes we don't think things look quite right, but they come out okay. Page 40 is the same, similar 40 and 41 of the OPEB. Detail. So page 42 is, again, you think back to this statement of revenue and expenses. It's very concrete, summary form. So this is a nice report to break down the sale of electricity by division, by customer base, residential, commercial, industrial, general services, and green power sales even, and then the municipal sales. It's nice to see the comparative. I mean, if you look at the far right-hand column, there are no large numbers there. It's so comparable. Amazing. And then page 43, also a nice schedule reporting kilowatt hours sold by customer class. I like to see things like this, like the very bottom line says ratio of unaccounted for kilowatt hours. That's something that we look very closely at when we do the DPU report to see what kind of losses you have. But 0.65 is remarkable. That's amazing. That's very low as far as kilowatt hours being lost in the system. So I think that's pretty much on the low side. Page 44 and 45, the last two pages are a breakdown again of your expenses by the FERC accounts. So it's much more detail than, of course, the statement of revenues and expenses, but it breaks it down and does a comparison for the 2 years between all your expenses. Okay, same numbers all roll up to the main report. I know I went quickly, skipped most of it, a lot of it. As I say, we'd be here till midnight. But it's one of the report. I won't even open it because it's the management internal control report, and it basically says the same thing you'll always have. Since you don't draft these financial statements that's perceived by someone to be a weakness. We don't have any departments, even with CPAs on staff, that actually stay up to date with the GASBs and all that stuff. And I always say I could never do this. Adam can, but I can't. So it's a very highly technical document that gets prepared, especially in government, the government arena. So that's perceived to be a weakness. But the good news is you had no other deficiencies from prior years and no new ones. So that's also good news. So,
Okay.
questions?
I just have a quick question. The Town of Shrewsbury Operating Internal Control Report,
Yes.
on your first page at the bottom, the last paragraph, it says something of the nature, a significant deficiency is a deficiency or a combination of deficiencies in internal control that is less severe than a material weakness, yet important enough to merit attention by those charged with governance. We consider the deficiencies described in the accompanying schedule of findings to be significant deficiencies in internal controls.
The next page.
Yeah,
No, the next page. That's a deficiency.
Yeah.
What he just said.
okay,
Yeah.
great.
Not being able to prepare the financial statement.
Save the specific deficiency, yeah.
Okay, good.
I don't agree with it. I don't make the rules.
Yeah, okay, I just want to make sure that I'm tracking
Yes.
on that one. Okay.
I guess the concept would be if you had a higher level CPA who was in the business doing this on staff, and they would provide, if you're a big company, you have staff, you provide the financials, and the auditors comes and audits them, they don't help prepare them. And I guess the weakness would be, we may miss something, because we're not day-to-day involved in the operations. We might miss something that there's someone who's more intimately involved with the accounting system might catch. So I guess that's the weakness, for what it's worth.
Thanks.
So how many adjusting entries are you making to the trial balance? Like how many, like when you go in and you have, because you're saying that the audited financial statements, right, like we can't prepare them because just because of everything. But when you go in and you get the numbers from us, how many adjusting entries do you need to make from our trial balance to the audited financial statements?
I suspect not very many.
There's not many.
Yeah.
There's less than 10.
Yeah.
Less than 10.
So how can we get to the point where we are preparing the financial statements? Is it a change in the accounting system that would be more helpful? Or, it doesn't sound like you're making a lot of adjusting entries. So the numbers we should be able to rely on these numbers and prepare financial statements on them.
I think many of the adjustments that are made, or several, would have to do with information that's coming in after the fact, after the book's already closed. For example, we have to wait for the actuarial study for the OPEB or the pension. So those actuarial studies give rise to some adjustments.
Okay.
So we would help make those adjustments. Anything else you
Yeah.
can think of? Depreciation expense, that's probably already on the books.
Yeah,
Yeah.
you guys had
Yeah.
pension and OPEB every year,
Yeah.
Yep.
from the actuary. And then this year we had the one for the payroll to catch up,
Yep,
so,
okay.
and that's it. We're not
Not
done
significant
with it yet.
adjustments. It's not like we're recreating the books in any way. Yeah, they're always in good shape.
Okay.
Anything else, Maureen? Overall? Any other members have any other comments on, other than it looks like it's pretty solid foundation at the time, we're a healthy organization.
Yes.
I want, one thing I want to just focus too, because, we talk a lot about how much we pay in lieu of taxes. A lot of the monies that we have with the treasurer as well, right, the interest goes to the town and not back to us, correct? So that's an additional layer of funding that you provide the town, other than just the in lieu of. I just want to present that because it's a positive thing on SELCO's part, is to, we play well with others. Okay?
My comment, just as a first-time reader of this, as an average citizen, I wasn't digging for this information before. I think it's very user-friendly. I thought if there was someone who just picked it up, I think there's a good story there. So I don't know if that's a requirement or something, or your touch on it, but I thought it was very easy to follow and a lot of back information throughout it that really help understand what it is, what the numbers mean and what accounts you're talking about, so. great.
I
One
do
other
have,
thing, that OPEB, I'm glad we put that money aside early, so we're up to date and all of that. I know a lot of towns are doing catch-up all the
Yep.
time with that.
my basic philosophy of having dealt with light departments for many, many, many years is that light departments structure their rates based upon costs. Unlike a town that structures their rates based upon their need to, pay the bills. So if we're gonna include, if we have to include an OPEB cost or pension cost in our financial statements, that means we're charging the customer those. So if we're charging the customer and collecting money from them for this specific purpose, we should be putting that money aside, because it's really their money.
Right.
So I like the idea of funding these things and having that money separately put aside for when the obligation comes due. I think that's the right way to do it.
And overall, in comparison with the other municipals that you do, we look pretty solid as far as comparison.
Yeah.
Oh, yes.
Very solid.
Yep.
Yeah, very, very, very good, yes.
Any other questions?
I guess just with the OPED and the pensions, I mean, there's a significant variance from last year to this year.
Not much, no, there was.
Well, there were like all zeros last year on the books, and then there's like the accruals were a lot larger this year. And that again, that fluctuates because of, you're getting the information from the actuaries, right?
Right.
I think this year there were a lot of changes to the makeup of the employees. A lot of people retired, we got a lot of new employees on, that's gonna change. I'm just curious what's gonna happen next year, given this current state of the economy and what the investments are gonna look like, and what impact that's gonna have on the financial statements. Again, we're not gonna know until next year, but it's something that I think we need to be aware of moving into the next year.
I would agree. If the market doesn't recover, let's say we end up with a not great rate of return on investments, then our obligations are gonna look much larger.
Okay.
The actual study, I would think, would generate higher numbers. Yep, good observation.
Okay. If there are no other questions or comments from the board, I thank you very much, sir, and we look
Okay.
forward to seeing you next year.
And we'd like to express our appreciation for your staff. They do a wonderful job and they're very, very cooperative in,
Well, that's great.
in getting things done.
Yeah. Well, that's
So,
great. Well, we
appreciate
really
that.
appreciate it.
Thank
Thanks.
you.
Thank you for
Thank
coming. The next item that we have is the review and consider approval of the 2021 DPU report, which is Department of Public Utilities.
Did we prepare that this year, or did we have them prepare it? Okay.
We had them prepared.
Okay.
Okay.
I was gonna say, I wasn't asked to review it, so something.
That was one of the things Stacy asked. She's like, to make Maria's life a little easier during tax season, let's have them prepare it.
And let's get this done on time.
Okay, as you're, Maria, I don't know if you had the time to go through what was presented, because you know, usually you have it, they offer it up for you to review, but do you have any questions at all?
No.
Going on? Okay. Want to just give a quick rundown for the viewing public as to what we're actually talking about?
So-
Thank you.
I don't have a copy in front of me, but basically the DPU report is a report we have to fill out for the Department of
Utilities.
Public Utilities. And we fill out this report once a year just to, give our numbers, and it cross-compares us with other MLPs, other IOUs. And we file this report, I believe, around the same time as the audit. It's due, I think, a little bit later, but we try to get it in earlier because certain parties need it for our PTF credits and other items. So we got that in this year, but it basically follows the exact audit numbers in just the FERC accounting format. So FERC accounting is just the standard for the electric utility industry.
Okay, so it looks like we approve, we get everybody to get a signature today on the, you have the actual original that needs to be signed. So, Mr. Tripping may have it in his folder over there.
What was it, what was it?
That's all right. Okay,
If we don't, we'll get you that.
no, that's all right.
Is this it?
Yep.
No, that's the warrant.
Okay. We'll get it, but that's,
I don't think I have
that's
it.
what the end game here today is to have this
Yep.
signed and ready to go.
Yes, and we just need a majority, so 3 out of 5 at least.
Okay, well, it'll be 3 out of 4. Maria, any questions?
No, I don't.
Okay.
Okay?
Matt, no? Tony, no? Well, all in favor of approving the right wording here, of the return of the municipal light plant township to the Department
So
of
that's
Public
this,
Utilities?
that is this one?
Yes, sir.
Okay,
I think we can sign it.
and we're all in favor, aye?
Yes.
Yes.
Good. So be it on that. Next is review and consider approval environmental justice resolution. Silence is gold.
Yeah, right? So trying to figure out how to get this to show up good on the screen.
Thank you, sir.
Well, Jackie's doing that, just to wrap up from the town meeting on Saturday, was the two things that kind of affected us. One was the environmental consideration for the town, that was approved, the article on that, in which we pretty well paralleled, or actually been leading the way on. And so that was approved for the rest of the town to take that on. So that was great. And the other one was, for those of you who may not be aware, it affects more of our linemen and everything, is the tree cutting statute that went into effect, that fortunately they put the correct wording in there, that SELCO we control our own destiny as far as clearing trees from utility poles and whatnot, rather than having to go to this municipal tree board that's going to be established every time we want to go trim somebody's trees down the road. Obviously, for the viewing public, we're also not just going to go clear cut a bunch of trees because we get a get out of jail free card. But I thought it was the town approved those two items, and they do affect us in SELCO. So just bring that back, let everybody know. Okay, are you ready there, Ms. Pratt?
Sure. So, we've got an environmental justice resolution that we're proposing that the commission adopt. And I just want to give you guys a little bit of background on environmental justice in general. It's a topic that is trending for sure in our industry as well as in others. You can see this, for example, if you look at the APPA's annual conference that's coming up in mid-June, they have sessions on environmental justice. When we go and we speak with NEPA or MWIC or MEME, there is a focus on environmental justice. This is an issue that's been coming to the top when we look at the infrastructure bill that's passed and all of the funding that's going to be coming through from grants. There's an environmental justice component. So with SELCO trying to lead the charge and set ourselves up to be sort of that role model utility for others to follow our trends, looking at the ways that we're engaging with our environmental justice communities is really important. And an environmental justice resolution, I think, would position us well to kind of codify that approach and set the stage for other folks to make similar adoptions. Excuse me. Sorry. So I think I shared this actual presentation with all of you guys in the electronic folder, so I don't need to read every screen. But environmental justice is a focus on ensuring that laws, regulations, and policies result in equitable distribution of environmental benefits. Environmental justice in Massachusetts is defined by the Commonwealth's Executive Office of Energy and Environmental Affairs, which we may have some familiarity with on this board. And there's actually a state-adopted environmental justice policy. And while there's not specific regulations in place right now requiring particular actions, I do see that likely to come down the line with us as a utility. So one of the things that we've been looking at, in particular to the upcoming infrastructure grant funding opportunities, is the Justice 40 initiative. Basically funding through these federal grants will be required to spend 40% of the funding to benefit environmental justice communities. In looking at this, adopting a policy, I think, puts us in a good position to establish that we have our eyes on that goal and get, some attention for our grant applications as we move forward. Grants that could be coming up would include transportation, infrastructure, renewable generation, energy storage, broadband grants, and more. And the good thing about these federal grants is they're going to be having the states, for the most part, applying to establish their own grant programs, and the funding mechanism will come through the states to utilities, municipalities, whoever. So when, I've been meeting or attending meetings about environmental justice at the federal level, the grants, the maps look a little bit different from environmental justice at the federal level than they do at the state level. And when we look at environmental justice in Massachusetts, we have a little bit more of an expanded definition. So there are more categories included than you might see at the federal level. And I think that bodes well for us when we look at trying to get some potential grant funding in the future. The three kind of key components in Massachusetts for environmental justice would be income, minority status or English isolation, or combinations thereof. So with the income, at least 25% of households in a particular block group, and these are based on 2020 census data, so they're census tracts within our community. It's not the whole footprint of Shrewsbury. It's broken up kind of into neighborhoods about sizes, right? At least 25% of households in a block group have an annual median income 65% or less than the statewide median. Minorities comprise 40% or more of the population, or 25% or more, and there's a median household income within the town that does not exceed 150% of the statewide annual median income. Or English isolation would be 25% or more of the households lack English language proficiency. In Shrewsbury, we have actually 11 different environmental justice block groups as identified by the state maps. So about 61%, a little over 61% of our total population resides in these different block groups, and that's almost 23,000 out of our 38,000 or so people. The two kinds of block groups that we have are predominantly minority-based. We do have one block group that's minority and income, and you can see that one in green. That's like about where Floral Street School is, I want to say, somewhere down that way. I think that's the road we're looking at, maybe. That might be Route 9 right there. Yeah, so diversity, equity, and inclusion is also a hot topic here in Shrewsbury. So we've got it at the federal level, we've got it at the state level, and then here in Shrewsbury, the Board of Selectmen had established a DEI task force in August of 2020. They conducted a very,
Can I just ask you a question? How, what are these segments of town? How are those lines drawn?
So those are the census block groups.
Those are the census.
Yeah, so those are
Okay,
census
parallel.
tracts,
Okay.
and the block groups are defined by the demographic data for each of the individual, basically neighborhoods. That's kind of the block groups. I don't know where the lines are defined in terms of how the federal government makes decision on how to draw them, but those are the lines that you're seeing are based on the census tracts.
Thank you.
So in 2020, the town established a DEI committee, and they conducted an extensive study and filed their report to the Board of Selectmen in October 2021. Recently, the town began working with the UMass Collins Center for Public Management, and they're establishing a communications strategic plan that helps the town identify underserved populations and develop strategies to better serve those members of the community. They've got a consultant that's also helping implement the recommendations of the DEI report, and as the town itself moves forward, policies and actions are going to be considered through the DEI lens, right? So environmental justice and DEI kind of go hand in hand. So this is a great example of where we have our sustainability report and our power supply policy, and the town is implementing their MVP program and their community action, climate action plan that just passed a town meeting. Like, these are the areas where we're dovetailing with similar concepts and tasks, right? So in looking at utility industry trends, as I mentioned, state and federal EJ requirements for us as a utility still are in development. We don't have any specific metrics that we need to reach, but we foresee that something along those lines is going to be coming soon. And we're all kind of learning together at this point. There's a lot of interest, whether it be at MWIC, our Joint Action Agency, the other MLPs, and our industry organizations are trying to get everybody up to speed on these concepts, really, over the next few months and years. And while we're going to make the approach here to adopt an environmental justice policy, hopefully, as an MLP today, I can foresee that this could be changing, and definitions may evolve over time. So it could be a little bit of a living document where we revisit it from time to time. But by adopting an environmental justice policy, I think it establishes us as a leader, and we're already kind of leading the pack. We're actively, our staff members here in Shrewsbury are actively engaging in efforts to develop programs with our partner agencies. We're trying to engage in every opportunity that we have to learn more about it, and make sure that we're establishing policies and communication strategies and programs that better serve these communities that have traditionally been underserved. And some of the best practices that we've come across as we work through these learning experiences, kind of run down the gamut of whether it's specific program development, right? So we have on this list language translation services. That's kind of a no-brainer. Adequate engagement and representation. So, like, do our committees, commissions, and boards in Shrewsbury look like our population? Does our commission represent those groups well? Relationship building with community groups is something that we've done across the board, and we're reaching out, continually in new ways from our team. We are targeting messaging to particular groups, coming up with special offers and opportunities that better serve the environmental justice communities. We've added some income qualified incentives and programs, education and outreach, establishing environmental justice policies, and working on programs for hard-to-reach customers, for example, renters. So these are the best practices. And as we run down them, you can see the actual things that SELCO has implemented follows along with those best practices. So we've been trying to develop this over I would say the last 12 months really is when this really came to the forefront as an issue here within our industry. And so some of the things that we've particularly done is we have had for many years our low-income share the warmth program. And in 2021, when we resumed electric terminations for the first time since the beginning of the pandemic, you guys were all very generous and created the COVID electric relief program to provide that additional funding opportunity for folks who are having difficulty paying their past due balances. Again, during the pandemic, we joined the K-12 Bridge to Broadband program and partner with Shrewsbury Public Schools to provide broadband to students in need who couldn't afford a broadband package. When we launched our EV rebate program, Patrick had the foresight to include an income adder, right? So if you were income eligible, you were a low-income customer, you would get an additional incentive on that to help you afford a vehicle. And with our EV program, we include both new and used vehicles, which makes it more attainable for folks to not necessarily just have to purchase a new vehicle. We just recently did a promotion where we sent a direct mailer to all of our Share the Warmth and fuel assistance customers, folks who received assistance to pay their bills over the winter months, giving them a $25 bonus incentive if they took advantage of any of our Next Zero programs before, I think it was June 30th, right? So if they, for example, got a thermostat rebate, we give them a bonus incentive. We're trying to make these programs more reachable for these different customer groups who may struggle to participate in other ways. We're adding a website language translation integration to the website in June. Just continuing with targeted marketing and educational outreach throughout 2022. We have plans to do that quarterly. And then as we look to the future of other opportunities where we can expand our environmental justice engagement, the first one is my recommendation of adopting an official environmental justice resolution. But we're looking at including other income eligible components to our existing Next Zero rebate programs, other rebate programs that we're running in-house. We're trying to see how the best way to incorporate that in there would be. A future consideration might be something like a language translation service for the customer service line or the help desk. Today, when a customer is in person, we're able to leverage like a Google Translate service on our tablet or phone, right? But over the phone, it's much harder. We recently hired a customer service rep who is bilingual, speaks Spanish. That's a great win for our group and helps us reach a new demographic that we have struggled to communicate with in the past. And then as we look to establish changes to our electric rates, it may make sense in the future to create income-based rate classes, which is something that other MLPs and IOUs have throughout the state and the country. We haven't needed it here because our rates have trended, our regular electric rates have trended lower than the low-income rates at other utilities. So it hasn't necessarily been a need, but we'll see how that changes in the future. So why do we want to adopt an environmental justice resolution? It's the right thing to do. As I said, it kind of codifies our approach to incorporating these environmental justice components into our day-to-day operations, our programs, establishes us as a community leader, and it's really in alignment with the changes that we're seeing federally, statewide, and at the local level. The grant funding opportunities is also a really good reason why having an EJ policy could help us in achieving some of that funding that becomes available in the future. And we feel that having a resolution indicates our desire to equitably serve minority and low-income customers, which we do have significant block groups here in Shrewsbury with 61% of the population living in some of those. So those are kind of the reasons behind the proposed policy. The policy that we've actually put out here is based on a policy adopted by Chicopee Electric Light. So it's not something totally new and out there. There's precedent out there for another MLP in Massachusetts to have one. And the language is substantially the same with some slight changes to make it more SELCO specific. And the recommendation today is that we adopt the environmental justice policy or resolution, and that we'll revise it and review it, periodically as definitions, requirements, and circumstances dictate. So, I think you guys all have the policy itself. It was a quick one-pager, nothing crazy. And if you guys have any questions about EJ in general, the policy specifically, or future program development, I'd be happy to try and answer some of those questions.
Said in June, there'll be a language translation. Is that, what languages will be translated?
So, good question. So we have, in the past, we had tried to integrate Google Translate with our website, and it kind of did some weird things to the layout. So we're just going to revisit Google Translate, which gives us access to a wide variety of languages. And I think that the languages that we're going to include are going to be informed by some of the language maps that we're able to get through the state's EJ mapping tools. But as well, the public schools have an excellent handle on the different languages that are spoken in our community. And, we've got some data there as to the most common languages that occur in our school system. I think that, coupled with the maps, we should be able to have a wide variety of languages for our community.
Yeah, I was just concerned it was just going to be one other and,
No, we're going to go nuts. We're going to put them all in there.
having substitute taught at the high school, it's a smorgasbord, so I want to
Yeah.
make sure we're covered.
Yeah, no, and really, honestly, I grabbed one of the annual reports from a previous year. The school department had put a few different annual reports out in the lobby of the town hall a couple months ago, and there is an excellent chart in there that ran through all of the different languages spoken. So I think that that'll be a great document to help inform us as we're choosing which languages to include.
Okay.
How many were in there?
Oh, a lot. Yeah, there were a lot in there.
Okay. Anybody have any comments, questions, or if you've had a chance to read more thoroughly the environmental justice resolution, and based on Jackie's input here, can we have a motion to accept the?
Motion to accept.
Okay. And do we have a
Second
second? Second. Okay. All in favor?
Aye.
Aye.
Okay. The environmental justice resolution is passed and accepted.
Excellent.
Just have one closing comment on this. I think this is great. Great work, Jackie. The one area of focus, sort of in the last set of slides, where you had the SELCO initiatives and things we want to, sort of the aspirational things we want to work on. One of the hardest things to tackle, which was just bothered me immensely, the way utility programs are structured, and this is probably more of a statutory framework that's the problem than anything else. When you look at all the programs, energy efficiency programs, solar programs, whatever, the things that we're trying to do to, reduce carbon emissions, which is very much applicable to what we're talking about here. The burden, the accessibility of being able to use those programs are aligned to folks that have a house, that are at a higher income, that can take advantage of it, right? To
Yep.
put solar panels, you need to own the roof that you're putting the solar panels on. Same with energy efficiency program. That focus on the renters, I think, really gets at that. And I think it's one of, the biggest crime in all of this, in my mind, is everyone pays. So if I am a wealthy individual that leverages a program to put solar panels on my roof, every ratepayer is paying for that at the end of the day, right? And that, figuring out ways, there's no simple solution to that, right? Especially under the statutory framework. But I think any program that really focuses on that renter, lower income, how do we get access to energy savings to those folks, to me is like the biggest needle mover of anything that we could do. So definitely encourage folks to come up with the big ideas to figure that one out, but it's a hard one.
There's a lot of talk about like a tariffed on-bill
Yeah.
kind
heard
of
that.
project that, Ipswich is piloting a tariffed on-bill where the energy electrification, efficiency and electrification measures would be made in, a rental property, and then there's a new actual rate class that applies to that unit, right? That pays down the cost of the capital investment over time. So, we're kind of waiting to see how that plays out a little bit, because there are definitely some challenges associated with that. particularly if you're fuel shifting and a landlord had previously paid for your heat because it was gas, and now we've just made it electric. Now the renter might be paying for that heat in a different way. So it's definitely a complicating factor. I would say that our efforts initially are really focused on trying to provide more opportunities based on the income, right? You can see that we have a lot of minority block groups, but when you look at the actual income, if you click through to that state map, they're relatively high areas, and it's really a lot of those yellow block groups that you see are minority based, and it's hard because we definitely have Shrewsbury's a very diverse town, and there is a demographic that is low income that isn't necessarily concentrated in one block group. So by designing programs that hit the income component, we're not just capturing folks in those block groups. We're trying to reach out to anybody who really is maybe a little disadvantaged in that way and present opportunities. So, for example, the direct mail opportunity that we sent to our Share the Warmth and SMOC fuel assistance folks, we know that they qualify, right? Like, they needed assistance over the winter. So we laid out a great, easy to participate in program, like, so this $25 bonus credit. We also highlighted for them that you can get a smart thermostat for $100, get a $50 rebate, get the 25 bonus credit, right? So now you've paid basically $25 for your thermostat, but then you can enroll it in Connected Homes and get a $5 per month incentive. So over the course of a year, you just put $60 more in your pocket. So now you're right side up on that thermostat, and that's an ongoing opportunity for us as a utility to shave the peak, right, through the Connected Homes program, and for that customer to end up with, some incremental incentives each month at that $5 per month. So we're trying to couple the programs and the opportunities in a way that it's achievable, right? Like, it's something that they can actually afford to do and makes good sense for them.
Good.
So we're trying to hit it on that front.
Great.
Okay.
Great.
With that, we'll go to item 6. Thank you, Jackie. Review and discuss the legislative outreach competitive transmission for offshore wind. Okay, Chris?
Thank you very much. So this particular item relates to investment opportunities in transmission assets. One of the things that we have found, or historically, I guess if I take a step back, historically, many of our investment partnerships through MWIC are focused on the actual generating resources. But one other key component to that strategy is transmission. And so historically, we have found there have been challenges to participating in the transmission ownership process. And so as we look at different ways to progress down this path of decarbonization, it absolutely incorporates local generating assets and generating asset ownership. But there's this also big component that not all of these things can be cited in our own communities or even in our own state. And so there's this need to be mindful of participating in access to transmission. And so one historical, I think, success story is the Hydro-Quebec transmission line that we leverage today in many valuable ways. And so through some of the more recent legislative activity, one of the things we've been pushing for is giving public power our specific business model, which we bring a lot of advantages there with respect to low borrowing rates, efficiencies, with respect to stretching a dollar and things like that. We've been really driving to put ourselves on a level playing field, or at least a fairer playing field with respect to the investor-owned utilities that seem to have cornered the market with respect to transmission ownership. And so that's where these letters come in to potentially ask these two questions. Is that something we would support as Shrewsbury and advocating for public power investment in transmission and accessibility for us to build out investments in that space? Subsequent to that, is there a preference to whether that type of activity come from the board at large or myself acting on behalf and carrying the SELCO banner in the various forms to bring that message forward.
Okay, well, I'm of the opinion that have you sign it as the general manager is our appointed representative to be able to do it.
Yeah,
And
I
these letters
agree.
would go to our state rep and senator,
Right.
state senator.
Gives
to
you more
support-
flexibility.
To support the efforts. And it's important that we stay in, I think it's important that we stay aggressive on transmission capabilities, and specifically our ability to play in it, because one of the things that really has me concerned was when Maine voted down a transmission line, the public voted down the ability that the throughput of getting power generated just in general, getting it to us. At least here is an opportunity to take offshore wind in Massachusetts and potentially be a part of the actual making some money on the transmission of said power, not just selling the power.
What happened with the one in Maine? Is that still next, or did it go through?
It was dead. The state, they had a public vote on it, and the people decided they did not want another set of transmission lines coming through their backyards. And so
So it is gone.
Well, that's being challenged.
Yeah.
Right now.
Yep.
There's still like a prayer that it could happen, but that one killed me because
Yeah.
I spent 3 years of my life on that.
Oh, really?
But
Yeah.
that's a really interesting one, but it speaks to the problem of transmission, right? We want all of these assets built. We want all you can build the generation as much as you want, but if you can't get it to the load center,
right.
it's all for naught. And it's becoming the biggest challenge. The main one went to ballot question.
Yeah.
NextEra dumped $25 million against the project, paid for it, convinced everybody it was awful, and
Yeah.
they killed it. And
Yeah.
if that's how these projects are gonna go,
Yeah.
Well, and then the transmission costs, our folks see it in town anyways, because of peaking plants and everything else. We want to run at high energy periods of time or demand during the summer, because the rates are determined by the folks who
Yeah.
own the transmission lines
Right.
based on how much we're drawing.
Right.
And that's why we're trying to force people not to do things between the hours of 4 and 9 or 10 in the evening, especially during really warm times. But if we're gonna have to pay more money, I'd like to get some of it back by
Yeah.
being part
no
of the
doubt,
transmission.
being on that side of the equation would certainly be nice. but-
So, anyways.
But I do just have a couple of questions. Where is MWEC looking to, they probably, I don't know enough about their position, right? They'd be a partner in a merchant transmission development. Are they focusing more in the marine environment, in the sort of collector, single trunk, transmission in the marine environment? Or are they looking more on the land base once it hits land and, gets rerouted?
Yep, great. That's a great question. So I would say we've had discussions. I guess speaking broadly, intentionally, we have had overall discussions about transmission investment in general being good, and then also participating in what's at our doorstep, the offshore wind transmission components. I do believe it's not. We haven't restricted ourselves to any particular component. And so if I had to venture a guesstimate as to what the answer to that would be, it'd probably be more land-based. I think some of these interconnects do come, as soon as they reach land, that's where we become a participant. I think some of that seemingly is dependent on some of these arrangements with the developers. But I think that's probably as much detail as I could shed on that one.
Would they look to go outside of Massachusetts?
Yes.
Yeah, because I see there being a much bigger play in New York, because New York's actually moving forward on it, where Massachusetts has been a little bit slower to put the gas down
Yep.
on this stuff, particularly in the water.
Yeah.
There's no desire for the Chevys, so they're doing that in the Mid-Atlantic, but not up in the Northeast. But
Sure.
on the land-based transmission, I think New York is where we'll see probably a quicker opportunity.
Okay, so if,
So the other part of that question is, do we want just Chris to sign it, or do you want it to be coming from the commission?
yeah. My take is have Chris do it as the single point of contact of it, but that's just me.
I agree. That's true.
Okay,
I don't know.
okay, so
Our thoughts are-
you have a motion to send the two letters as written and have the general manager sign for it.
So move.
Okay, second?
Second.
Okay, and all in favor?
Aye.
Okay, great. Good, we'll see keep going on that. Next is the review and consider approval of the SELCO Commission meeting schedule. Here we go. My first question is, Tuesday, April 18th, is that going to be a?
Oh,
when is-
yeah, that was a big, I'm
when-
like,
I think
well,
that-
two things. One, it's tax day, I won't be here. Two, expecting the auditors to be here to present the audited financial statements probably isn't gonna happen either, so, that's definitely, I would actually suggest that the presentation of the annual audit be moved to May. And I would very much appreciate a move of the April 18th.
Yeah, and actually, that's a school vacation week. That makes it hard for everybody as well. So I would suggest to potentially do the 25th of April,
I'm good with that.
25th of April. Tony's checking the magic calendar of
Yeah,
life.
that's fine.
Okay. And does anybody have any other proposals? Everyone still agrees 7:30 in the morning?
Does anyone know when February vacation is?
It's probably that week, though.
It's
the 21st,
probably,
right?
it may,
Seems like it's usually that third week in February.
yeah.
Yeah, right off of the
So do we want to
holiday.
move that to the 28th or do it the week before? Seeing there was nothing scheduled for anything, that we can go either way.
Which one is that now?
Well,
February.
Yeah, President's Day is the 20th, so that has
yeah,
to
so,
be vacation week.
so either we move it to the 28th or go back to the 14th.
We're oh, no, March was.
Valentine's Day?
I'm good either way.
All right, no, 14th, yeah, that's probably not a good move either.
You don't
Okay,
want to celebrate Valentine's Day together?
Hey,
I'd have a lot of explaining to do. Anyways,
It's the morning, what are you doing?
yeah, yeah,
No breakfast in bed?
excuse me, yeah, yeah.
Well, I'll bring it to Bob for.
Yeah, I'll dress as red, I'll be Santa Claus.
We'll do Meals on Wheels for you.
Yeah, thanks a lot. Okay, so, do you want, okay, so February the 28th,
Okay,
okay, and then April 25th,
okay.
and then move presentation of annual audit to May. If it's available earlier, we can certainly move that back up, but, you know,
Are we not, what about the audited cable? Are we-
that's-
It'll be next month.
Next
I'm
month?
working with the auditors on something. There's one number that we're going back and forth on.
Okay, okay. So do we want the presentation of all the financial statements to be at one sitting next year?
normally it would
or-
be.
Right?
Normally it
So
would be, yeah.
that's what we're targeting
Yep,
for,
yep.
so
Yes.
I'm going to assume that we're gonna have to move it to May.
Yep.
right?
Okay.
So you had February 28th as a Monday, you see that? Is that right?
No, February
For
20,
2023?
Should be a Tuesday, the 21st.
It's a Tuesday. You in the right year? We're in
Yeah,
2023.
2023.
Yeah, let me make sure I'm in the right year.
You're just testing us, I know. Okay, so,
No, it wasn't.
okay, given that, once Tony verifies that February 28th is in fact
Yeah,
a
that's,
Tuesday,
it actually is, yeah.
can we have a motion to accept the proposed SELCO Commission meeting schedule for 2022 to 2023?
So moved.
So moved, okay, second?
Second.
Okay, all in favor?
Aye.
Aye, okay, so agenda as changed, with February 28th and April 25th being added, and the move of presentation of annual audit to May 16th.
Could we just
Okay?
make a request off of that? Could you have someone circulate that to the final version of the
Yeah,
changes
right.
to us,
And
please?
send out meeting things so you can get that in here.
Yeah, that'd be great.
Great,
Thank you.
okay?
Do you want to put do you want your Google calendar invites for the year?
Yeah,
I mean, that's always obviously very easy and nice, but not
Is that possible?
Yep. It is,
essential,
yeah.
but yeah, great,
I'll send you all the invites for the
Thank
full
you.
year.
great.
okay, and do we have, okay, then final step for us before we go into an executive session is the general manager's highlights. So, Chris, it's over to you again.
all right, thank you very much. So again, in typical fashion, I try and pull out noteworthy items for the legislative bit section. So the one that just came across my inbox before this went to publication was just a speaking engagement by the charter CEO Just something I thought was interesting was, you know, with all of the funding now being provided for broadband deployment across the country, there's always some kind of challenge to overcome, obviously, and so now you're finding funding, you know, meeting workforce challenges of today's world, and so I just threw that in there. Not in that we've seen any particular impact yet. I put it in there as something that hits the back of my mind as we go out to bid our future phases here in Shrewsbury. These are the same resources they're pulling from fiber build-outs in other parts of the state, in New Hampshire, Maine, a lot of these other rural communities. So I just put it in there, I think, as something to be aware of with respect to how these contract forces are being pulled in different directions to.
Well, Joel and I were talking earlier, I mean, I ran into a couple of installers for fiber on my travels and just asked, you know, how they were doing and how they liked it. And they said, oh, we love driving down from New Hampshire to Shrewsbury to work here. The people are great. And I'm going,
Yeah.
these are the, you know,
Yep.
we have literally installers to keep the numbers, you know, to keep it going. They're coming from, even from out of state, so they're at a premium. So that's why another reason we need trade schools to train more people to be able to do this sort of stuff, or intern programs that we can bring some people on.
Yep.
Okay, I'll stop. I'm out.
So that I tossed in there. You'll see the general theme that I was kind of setting some data points for with is electricity rates increasing, summertime costs. You know, power prices jumped 51% in PJM, 85% in New England in Q1. You know, these are things that we're actively monitoring. You'll see in, I believe it's in the electric ops section, but we do have an active cost of service study going on the electric side, so we hope to have some results to discuss in the next month or two on that.
Do we find ourselves getting jammed for the spot market over the weekend when we were up to 90 plus, or we were in pretty good shape overall?
Most of our power supply is hedged.
Yeah, yeah.
We're very little exposure to the spot market pricing.
Great.
But I believe, did Centec ran?
Yes,
And
Centec generated did run.
Did the peaker?
The peaking plant
You
did
didn't
not
have to.
run.
But anyway, so that was, you know, hits a few of those articles just from different angles and different reasonings that that we're trying to be mindful of. And then I threw in some as well. I mean, somewhat, I guess, as a tangential influence on electrification in some ways too. But you know, how the Ukraine war could make New England shiver was one article that caught my eye. Because again, you have the electric side that we're focused on, but anyone that is here or watching this that might heat with gas that hasn't electrified, it's going to be the same story for these other fuels, for other elements of the of your own household and business budgets. So it's just an interesting time that we're trying to stay on top of. So then a couple of things just to highlight some of our HR activity, given workforce has kind of been on the forefront recently. We had, well, Rosanna's here even, so I'll even mention this. She's transitioned to manager of IT and has really, I think, done a good job of herding the cats that are just over down the hall there. So
Watch out, your wireless will go away.
That's true. I've downloaded everything. But on the flip side too, we have, in a good way, you know, again, recruiting always surprises me, but we have open apprentice line worker positions. We had 100 applicants that we're sifting through on that. We have a CSR position that we're recruiting for. There was another 100 applicants on that, so it's been keeping us a little bit busy sifting through those. So that's I think, a really good thing. We've posted for a cable maintenance tech. We had another long-time retirement, in Joe Maynard, so I just wanted to call attention to Joe Maynard and his 34 years of service to SELCO. That, perhaps the warm weather and the prospect of beaches influenced that. But again, congrats to him on attaining retirement. That's great. And again, we have we're gearing up for our posting for a senior engineer role too as well.
Okay.
And then the other two.
Well, you don't have to toot your own horn.
Oh,
I'll take
no,
the next
I
one.
will. I was gonna.
Congratulations on
Yeah.
Worcester Business Journal Power 50. You
Right.
changed, it says that
Excellent.
50 of the most influential people in central Massachusetts economy for the past 12 months. And you were profiled in the technology category, so well done on that one, Chris.
I thank you. Appreciate that.
Very nice.
I thank you. And I was just going to highlight the deed component. I think, in just a fortunate turn of events. So I had finished out my term limit with the APPA deed board of directors, and just as a quick summary of that, the deed program is Public Power's national R&D arm, and so we were fortunate that Jackie, our own Jackie Pratt, put in a very strong application for that seat, and again, I'll say it in this forum too, I was not allowed to vote, contribute, or anything like that, so, but she was selected to take that seat representing Region 8, so there's some really good continuity there, and I'll have to say it was one of the best experiences I've had, so I'm happy for Jackie to be able to
Well done on that one, Jack.
to do that.
Congratulations, Jackie.
And equally.
So that was some good stuff there. It is in there, so we're engaged in the electric cost of service study, so please stay tuned for that. That we have a lot of moving parts that we're trying to account for with respect to that, so that'll take up some agenda time in the future. Broadband, and just to touch on this, the fiber project, we're wrapping up. Again, as I believe I mentioned it last meeting, so not to rehash it, but we just had that one contractor transition, so we're still working on those two respective bid locations. But in the meantime, all these other areas that have been available, we actually have had success, and I can't remember, I'm sorry if I mentioned this last meeting, but we actually have had a CSR here for a couple hours, a couple nights a week. First, we tried it out to see if we could get people at home, because leaving messages and trying to reach them during the day, you get busy, you get home, and something's going on, and you just don't make the call. But getting people in the moment has really been a help to talk to them live.
Good.
And so we have someone here doing that, and that's helped encourage the transition in these areas that are available for conversion. So those are just some of the numbers there. Happy to answer any questions.
No.
Decrease in internet issues, I think that's really good. The other one I just wanted to call attention to is the Minerva Platform. This one I think is just an important component to note. This is the over-the-top version of our cable services. So now, we're just working the bugs out to make sure we actually have a final market-ready product for folks to have a TV option for over-the-top streaming. Again, just as maybe to add the further context for anyone that is wondering, the TV service provided on the current legacy coaxial system is not compatible with fiber. And so Minerva is our ability to deliver TV services over that fiber system, provided you don't use broadband to go get your own Roku, Apple TV, Hulu, Disney, so on and so forth. So that Minerva product is there, and our team's working on that as we speak. Help desk personnel, that's a good point. So we did make some adjustments there to the Tier 2 service. So just again, as we emphasize the role that broadband plays, we supplemented our internal folks with a 24/7 help desk, which went live. So again, if you're on a business meeting, we're in a global economy. So if you're on a business meeting with China or India in the middle of the night and you have an issue, we have a team there to make sure you can continue your virtual meetings and your, financial transactions or what have you. And then we also have this system of tier 2 techs that can offer that elevated level of support should your issue be more complex. And so we were able to promote 2 folks from within who've done a really good job for us.
I have one question about
Yes,
the
sir.
Minerva. So someone like my brother who doesn't have internet,
Yes.
he's got TV, how is he gonna get that
That is
TV?
an excellent question. That's something we were just discussing even yesterday. So we do have some options. Right now, we do have the ability to do called a restricted internet access.
Okay, so
So it really,
that's right, you mentioned
it
it, right, yeah.
doesn't allow you to access anything else
He
except that.
doesn't want, he
part.
doesn't want to access
Yeah,
it.
so, it-
Okay,
but there are other things we're exploring.
yeah.
Outside of that. And then, I guess not, just in the interest of time, we're making, again, continued progress on the energy front. We're throwing in these additional statistics on the IT side. We have a good team there. So we're starting to build some of these metrics with respect to how we provide these services to the folks that use our IT services. And I think those are the
Okay.
big ones.
Any other comments, questions? Maria?
sir.
No?
Good,
Matt?
thank you.
No?
No,
Tony?
sir.
Well, great. Thanks. The people are doing great work. I see a lot of work, especially on the electric side down there by the Market Basket entity. Any idea when that's going to be lighting up down there, or whether they're actually going to move in or start selling stuff out of Market Basket? Is it, in the spring of next year, or?
They were talking fall, right?
Really, this fall?
I agree, September.
Coming along. Boy, it's really,
People are moving in the apartments.
yeah, the apartments are already,
apartments.
yeah. Wow. Okay, great. And then-
Jim, thank you for doing the additional info on the working capital. Thank you.
And I would like to just make a general comment to the public that, when driving around town, we have a number of our employees are out, whether it's doing the fiber installs or regular cable, or the electric folks doing poles and whatnot. And a lot of the roads, like Spring Street and Hill Street and High Street, and they're narrow, they're twisty, and you're whipping around. I'm just afraid, day for day, even though sometimes we'll have police coverage, sometimes we don't, and there's cones, that people pay attention. It's just like being, watching school buses, like poor Maria got stuck behind one today, but at least she knew what the rules were. The folks, just for the safety of our own people, I ask the people to just really stay clear of any of the workers that are, doing stuff with ladders against a utility pole, or or actually putting poles up and whatnot, and seeing the guys, flying around in their buckets. So just keep safety paramount for our folks. With that, in order to close this meeting, we have to have a roll call vote to go to close this meeting and go to executive session. So I have to read this. We'd like to enter into an executive session with respect to Mass General Law, Chapter 30A, Section 21, to conduct strategy sessions in preparation for negotiation with non-union personnel, or to conduct collective bargaining sessions or contract negotiations with non-union personnel. Do I have a motion to close the open meeting and go to executive session?
Yes.
Okay, in a second. Yeah.
Second.
And so a roll call vote. Matt?
Yes.
Tony?
Yes.
Yes. Maria?
Yes.
And Bob Holland, yes. Okay, the meeting is closed. Thank you very much.